we got to think about December trading, which tends to be quiet towards the end of the year, just in time for the Santa Claus rally, with a few exceptions. And on today's Stocks in Translation, we break down how stocks tend to trade in the last month of the year to help get your portfolio ready for 2026. First, let's take a look at how the S&P 500 index tends to perform in each month of the year. So there you go, 12 months, 12 bars there. The only down month here, and this is going back to 1990, tends to be September. And I'm using the median, which is kind of like the average, going all the way back to 1990. Now here's December, and you can see it's a little bit less than November, which happens to be the best month of the year. That's what we're wrapping right now. And it's kind of in the middle of the pack, but nevertheless, it is positive, or it tends to be positive about 80% of the time. So those are pretty good odds that we have with us. Now I want to show you a couple different models that I've been updating this entire year. Now, what is in white here is what has actually happened. And the first thing you notice is there's that big post-Liberation Day dip and the blistering rally that we saw off of that. Now I have two different maps in here. The median since 1990, that's the green line. That's basically tracking what I just showed you in that other chart, except this is updated on a day-to-day basis. What you need to focus on here is the month of December. Here's where we are. As we enter December, this just gently drifts up into the end of the year. But I actually have a different model that I have found to be very accurate, not only this year, but the last one. And this is based on the median since 1928. So that's going back a really long time, but it actually doesn't include most years. It only includes the years where we match up perfectly with the day of the week. And so what this is saying is we tend to get a nice rally into the end of November, which is kind of what we're having right now. And then we take a little bit of a dip into the middle of the month, and then we reaccelerate into new highs into year end. I would separately add that by the work of Almanac Trader, that's Jeff Hirsch, he's a friend of Stocks in Translation. He has also said that when markets are up big, the way they are now, coming into December, we tend to see consolidation for the first half of the month. So we might expect a little bit of sideways, but again, anything can happen because what we call seasonality, those tendencies based on history, well, that only accounts for about 1/3 of price action. Reality, you know, what the catalysts are and what we face on a day-to-day basis, that's at least 2/3. Now, I want to cover another market that's related to all this. This is the VIX Volatility Index. And a quick refresher here, the VIX goes up when stocks go down, for the most part. That's just kind of a loose interpretation there. But the green line is what has happened this year. And again, I'll point out this big post-Liberation Day spike. We haven't seen anything like that in quite some time. And then we had a couple of volatility spikes in October, and then I believe just a few weeks ago. And those were pretty muted. Nevertheless, the white line is the average from 1990, and you can see that after peaking in October, it just kind of gently stair steps down into the end of the year. And that's as traders go on holiday. We don't typically see a lot of volatility. So it would be really unusual, though not unprecedented, to do so. So having said all of that, well, let me go back to my chart here. Here are a few final thoughts on December trading. First of all, we have markets, well, they tend to go up or at least sideways as volatility drops. Stocks rarely crash, but 2018, that was a big exception. When we do see big sell-offs at the end of the year, they tend to come at market bottoms and also tops. So that observation actually comes courtesy of Almanac Trader, who also notes that when stocks are up big into the end of the year, as I just noted, we tend to see that consolidation for the first half of the month, and then a rally into the second half into the end of the year. Also, although we didn't talk about it today, small caps, they tend to do better than large caps, the S&P 500. And finally, you've probably heard of the Santa Claus rally. It is actually the last 5 trading days of December, plus the first 2 of the new year. So that's your start for 2026. And for more portfolio tuning tips and tricks, tune in to the Stocks in Translation podcast. New episodes can be found Tuesdays and Thursdays on Yahoo Finance's website or wherever you find your podcasts.